This might be one of the last years to obtain wealth in the world of cryptocurrencies. And by the end of this video, you will gain information that is known by less than 1% of world population. The vast majority of people in the world don't know anything about trading crypto, even less about proper strategies. And that's a big deal. As the world of cryptocurrencies continues to grow and more people begin to accumulate it, those who take the time to understand it will have an edge over the rest of humanity. The difference between those who grasp fundamentals and those who don't will only become more significant as time goes on. This year is important because for the very first time in history, we have USA administration that supports crypto, and it is only a matter of time before everything skyrockets. So if you wish to be on the right side of history and make that wealth through crypto, make sure to subscribe to Bitcoin Academy. I am Bitcoin Professor, and I was created in order to teach you about crypto fundamentals, and I am doing it for free. So the least you can do is subscribe. Okay. In today's video, we will cover and simplify best investing and trading strategies, and at the end, I will even give you my personal opinion on which one is my favorite. Strategy number 1, dollar cost average. All right, imagine you love pizza. Let's say the price of pizza fluctuates. Some days it's $10, other days it's $15, and sometimes it's on sale for $5. Instead of spending all your money on pizza when it's expensive, you decide to buy one slice every Friday no matter the price. Over time, this means you'll sometimes buy when it's cheap and sometimes when it's expensive. But in the long run, you average out the cost and don't overpay. That's exactly how dollar cost averaging works in crypto. Instead of dumping all your money into Bitcoin at once, you invest a fixed amount at regular intervals, whether the price is up or down. This way, you avoid the stress of timing the market. Let's say you decide to invest $50 in Bitcoin every week for 1 year. January, Bitcoin is at $40,000. You buy 0.00125 BTC. March, Bitcoin drops to $20,000. You buy 0.0025 BTC. June, Bitcoin goes up to $30,000. You buy 0.00167 BTC. December, Bitcoin is at $50,000. You buy 0.001 BTC. By the end of the year, you've accumulated more BTC than if you had put all your money in at the start when the price was high. You took advantage of lower prices while reducing risk. Why is DCA perfect for crypto? Crypto is crazy volatile. One day Bitcoin is up 10%, the next day it's down 15%. Instead of stressing about price swings, DCA lets you stay consistent without emotional decisions. Avoid FOMO, buying at the top and panic selling at the bottom. Build wealth long-term without needing expert trading skills. Even the biggest investors, like MicroStrategy, use a form of DCA to accumulate Bitcoin over time. And getting started is super simple. Here's what you do. 1. Pick an amount you're comfortable with. Could be $10 per week or $100 per month. Just make sure it's money you won't need tomorrow. 2. Choose a crypto exchange. If you don't know anything about exchanges, no worries. There is a tutorial for complete beginners on our channel, which will help you set everything up. 3. Decide on the crypto. Most people DCA into top 5 cryptocurrencies, and for a good reason. You see, DCA strategy is long-term, which means you want to invest into stable assets that you believe will be successful long-term. So the bigger that currency is, the less volatile it is, making it less risky to invest in. 4. Set it and forget it. No need to check prices every day. Let time do the work. But what if crypto crashes? A lot of people ask, what if Bitcoin drops 50%? Well, here's the magic of DCA. If you invested $100 at $60,000 BTC, you'd only have 0.00167 BTC. But if you kept DCAing and Bitcoin dropped to $30,000, your same $100 would now get you 0.0033 BTC, double what you got before. So instead of fearing a crash, you accumulate more Bitcoin at lower prices. History shows that long-term, Bitcoin always recovers. And if you want to understand why Bitcoin is gaining value while traditional currencies are losing value every day, make sure to check our video, which explains everything about Bitcoin you need to know. Okay, let's do a short recap of dollar cost average investing strategy. You invest a fixed amount of traditional currency every fixed amount of time you choose. This way, if the price is going up, your previously bought asset gained value. And if the price is going down, you can get more assets for the same amount of money. It is a long-term investing strategy and will only make sense if you believe that asset will perform better than traditional currency you are investing in. I like to call it a smarter way of saving money. Okay, moving on to strategy number 2, which is buy and hold strategy. What is buy and hold? All right, let's break it down. Buy and hold is exactly what it sounds like. You buy crypto you believe in. You hold it for years, no matter what the price does. You ignore short-term crashes and hype cycles. Sounds too simple, right? But this strategy has made Bitcoin investors millionaires without needing to trade every day. Let's make some real-life comparison. Imagine you bought a piece of land in a growing city. You don't sell it just because the price drops for a year. You hold it for 10 plus years until more infrastructure gets built around it and it becomes super valuable. Crypto works the same way. The longer you hold, the more likely your investment grows massively. As we already said, crypto is extremely volatile. But if you zoom out, Bitcoin, Ethereum, and other strong projects have always increased in value over time. Bitcoin's history: 2013, $100, 2017, $20,000, 2021, $69,000, 2022, $15,000, and 24, $100,000 plus. If you had held your Bitcoin for 5+ years, you'd still be in massive profit, even after multiple crashes. Key idea: most people panic sell during dips, but smart investors hold and wait for the next bull run. Now, you might be thinking, but what if I trade instead? Here's a crazy fact. Studies show that 90% of traders lose money because they try to time the market. Meanwhile, most long-term holders who invest in strong projects make huge gains over time. Example: if you bought one Bitcoin at $10,000 in 2020 and just held it, you would have seen it rise to $69,000 in 2021, a 590% gain. Meanwhile, a trader might have bought and sold multiple times and ended up with less profit or even losses. The problem with trading: you need to time the market perfectly. You might sell too early. Emotions like fear and greed make you take bad trades. The easiest way to win is to buy good crypto and hold it for years. So, what should you actually buy and hold? Strong, established cryptos with long-term potential. Avoid meme coins and hype projects. Many new cryptos pump and dump fast. Stick to proven assets with this strategy. Now a big question: when should you sell? 3 smart strategies. 1. Sell a portion in bull runs. Take some profits when Bitcoin is at record highs. 2. Hold a percent forever. Some people never sell all their Bitcoin, treating it like digital gold. 3. Reinvest in strong projects. Shift profits into other growing assets. Example: if you bought Bitcoin at $10,000, you could sell 50% at $50,000 and still keep the rest for future gains. Buy and hold doesn't mean never selling. It means holding long enough to see massive returns. But before you start holding, watch out for these common mistakes. Selling during crashes. Every bull market has dips. Smart investors hold through them. Holding bad coins. Don't hold hype projects with no real value. Not taking profits. It's okay to take some profits in bull runs. Okay, let's finish this strategy by saying that you should use it if you want to build long-term wealth without stress. Don't want to worry about short-term price moves. Believe in the future of asset you are investing in. You have a great chunk of money you can invest, which won't affect you for the next 2 to 3 years. Let me know in the comments. Are you a holder or do you prefer trading? And if you found this helpful, smash that like button. Okay, moving on to strategy number 3, which is trend following. Trend following means one thing: if the price is going up, you buy. If the price is going down, you stay out or sell. Sounds too easy, right? But this is exactly how some of the most successful traders make money. Think of it like skateboarding. If the road is smooth and downhill, you keep going. But if you hit an uphill or rough patch, you stop or change direction. Trend following does the same thing. You ride the wave until it slows down. Crypto is crazy volatile, but guess what? It also forms clear trends over time. Here's an example. Bitcoin 2020-2021 went from $10,000 to $60,000, which was a strong uptrend. Bitcoin 2022 crashed from $60,000 to $20,000, which was a downtrend. If you follow trends, you avoid getting caught buying at the top and holding through a crash. Trend following is all about riding momentum and not fighting the market. Okay, so how do we know if Bitcoin or Ethereum is in a trend? Here are 2 easy methods. Method number 1, moving averages, or MAs, which is nothing more than the line that calculates the average price over a set number of periods. So if you see MA 25, it means it's a 25-day period. MA 50 is a 50-day, and so on. Okay, now I will show you where and how to actually see those lines. First, go to your browser and type Binance Bitcoin USDT. Click on Binance Spot. Now you can see a chart. In the top left of the chart, you can see a drop-down menu with 3 moving averages that were set as default. Now you can go to Options and choose each MA period and line color. So let's do that. Let's use 50-day and make it blue, and 200-day and make it red. And as you can see, now these two lines are visible on this chart. Okay, now that you understand this, let's get back to the strategy. How it works. If Bitcoin's price is above the 50-day moving average, it's in an uptrend signaling you to buy. If it's below, it's in a downtrend. Stay out or sell. Example, Bitcoin in 2021 stayed above the 50-day MA for months. That was a sign of a strong trend. Method number 2, the golden cross and death cross. Sounds scary, but it's actually simple. Golden cross equals uptrend signal. When the 50-day moving average crosses above the 200-day moving average, it's a sign to buy. Death cross equals downtrend warning. When the 50-day MA crosses below the 200-day MA, it's a sign to stay out or sell. Example, in 2019, Bitcoin had a golden cross at $5,000 and went to $60,000. In 2022, Bitcoin had a death cross at $48,000 and dropped to $20,000. If you had followed these signals, you could have made nice profits. Simple trend following plan. 1. Identify the trend. Use moving averages or golden crosses. 2. Enter the trade. If the trend is up, buy when price is closer to the moving average line. If it's below, stay out or sell. 3. Ride the trend until it weakens. Don't exit too early, but also don't stay too long. Example trade, Ethereum breakout 2021. Price breaks above $3,000. Uptrend is confirmed, you enter trade. Ethereum hits $4,500 but starts breaking down, you exit trade. Plus 50% without guessing. Now before you go all in on trend following, watch out for these mistakes, chasing pumps. Don't rush into a trend that's already too extended. Ignoring market reversals. Trends don't last forever. Watch for signs of a trend break. Always trust signs and never include emotions. Let's recap for a second. As you saw, the trend following strategy is neither long-term nor short-term. It depends on a trend. Therefore, you need to invest more time, knowledge, and discipline if you want to be successful in this strategy. It is much more complex than the previous two. But on the other hand, if executed properly, it can gain you much more than the previous two. All right, moving on to strategy number 4, which is day trading. All right, let's break it down. Day trading means buying and selling crypto within a single day, making small but quick profits multiple times, taking advantage of short-term price movements. Unlike long-term investors who hold, day traders don't care about the long-term price. They just want to make money from daily price swings. Real-life example. Think of it like flipping sneakers. You buy limited edition Nikes for $200 in the morning, and by the afternoon, demand has pushed the price up to $250. You sell, take your profit, and repeat. Bitcoin can move 3 to 5% in a day. Altcoins can pump 10 to 20% in hours. Compare that to the stock market, where prices move 1 to 2% per day. Crypto offers way more opportunities to make money every single day. Example, Ethereum starts the day at $3,000. A sudden surge pushes it to $3,300. A day trader buys at $3,050 and sells at $3,250. Quick $200 profit per coin. Before you start, here's what you need. A crypto exchange with low fees. Binance, Bybit, Kraken, or Coinbase Pro. A trading strategy. More on that in a second. A risk management plan. Never risk everything on one trade. Time and focus. Day trading requires watching the charts daily. All right, let's talk strategies. Here are 3 powerful methods used by pro traders. 1. Scalping, the fastest strategy. Scalping is all about making super quick trades, holding crypto for minutes or seconds to grab small profits many times a day. Example, Bitcoin jumps from $42,000 to $42,200 in 5 minutes. A scalper enters at $42,050 and exits at $42,180, making quick profit. In order to do that successfully, you must have knowledge about technical analysis, indicators, and have a disciplined strategy. 2. Breakout trading, catching big moves. This strategy focuses on buying when the price breaks key resistance levels. When an asset moves past a strong barrier, it usually explodes in price. Example, Ethereum is stuck at $2,000 for days. Suddenly, price breaks above $2,050 with high volume. A breakout trader enters at $2,060 and rides the move to $2,200. This would be the closest thing to trend-following strategy, but on a daily level. So profit is faster, but there is always a risk of a false breakout, which can result in losses. 3. RSI and moving average strategy. The classic. If you don't want to rely on gut feeling, indicators can help. How it works. RSI, or Relative Strength Index, shows if crypto is overbought or oversold. Moving averages, or MA, help spot the trend direction. Example trade. Bitcoin's RSI drops below 30, oversold. Price touches the 200-day moving average. A trader buys, expecting a bounce back up. This one is the slowest and, let's say, safest out of all 3 we mentioned. Okay, let's recap day trading for a second. On a first look, it looks super tempting. Everyday profits, dopamine rush, quick money. But the truth is far away from that. In order to be successful doing day trading, you must have an insane amount of knowledge, crazy discipline, super resistant character, and insane emotional stability. Also, you need to be present all the time. And when you add all requirements, you will realize that day trading is basically a job that requires insane skills and dedication. That is why the percentage of successful day traders is estimated between 5 and 10%. So if you're not ready to invest time and effort, you better stay out of this strategy. All right, let's move on to the final strategy for the day, which is growth investing. All right, let's break it down. Growth investing means finding crypto projects with high growth potential, investing in them early, before the masses catch on, holding as they gain adoption, increase in value, and explode in price. Unlike day traders who flip coins fast, growth investors look for long-term potential. It's like betting on the future leaders of crypto. Imagine you bought Amazon stock in 1997 when it was just an online bookstore. If you held on, you'd be sitting on millions today. Growth investing in crypto is similar. You're looking for the next Bitcoin, Ethereum, or Solana. The crypto market is still young, and that's why growth investing is so powerful. Bitcoin and Ethereum weren't always giants. In 2011, Bitcoin was worth $1. In 2015, Ethereum launched at 75 cents. In 2021, Ethereum hit $4,800. Early investors saw insane gains. Most people focus on what's already big, but smart investors look for the next big thing. That's how you win with growth investing. So, how do you find a crypto that's about to take off? Here are 3 key factors to look for. 1. Strong use case and real-world adoption. Ask yourself, does this crypto solve a real problem? Ethereum brought smart contracts to crypto. Polygon made Ethereum transactions faster and cheaper. Chainlink connected blockchains to real-world data. Projects that solve real problems tend to grow fast. 2. Developer and community activity. A strong project needs an active team and engaged community. How to check this? Look at their GitHub. Are developers actively updating it? Check Twitter and Discord. Is there a strong community backing it? And also make sure to follow me on Twitter. Link is in description of the video. Read the white paper. Does it have a long-term vision? Solana had a passionate developer community, which helped it grow from 1 to 250 plus in 2021. 3. Strategic partnerships and adoption. A project backed by big companies or institutions is a huge green flag. Polygon partnered with Disney, Adidas, and Starbucks, which resulted in more adoption. Chainlink provides data feeds to major DeFi platforms, which equals in more demand. The more real-world adoption a crypto has, the more likely it is to grow. Now that you know what to look for, here's how to find these coins before they go mainstream. Check CoinMarketCap and CoinGecko. Look for low market cap gems with strong fundamentals. Follow crypto influencers and analysts, but always do your own research. Join early presales and IDOs. Some projects offer early investments before public listing. Watch for exchange listings. Coins that get listed on Binance, Coinbase, or Kraken often pump. Look for undervalued projects that have strong fundamentals but haven't gone viral yet. Before you dive in, let's talk about the risks. Growth investing can be high reward, but it's also high risk. Not every project succeeds. Some new cryptos fail or turn out to be scams. Market crashes happen. Prices can drop fast, so patience is key. It requires research. You need to study projects, not just buy hype coins. How to protect yourself. Diversify. Don't put all your money in one project. Invest in real utility, not hype. Still not convinced? Here's how growth investing made early investors rich. In 2011, buying $1,000 of Bitcoin would be worth over $60 million today. In 2020, Solana was $1.50. In 2021, it hit 250 plus. That's a 16,000% gain. So, should you try growth investing in crypto? If you want to find the next 10x or 100x projects, are willing to do research and hold long-term, can handle some risk for big rewards, then yes, growth investing is a powerful way to build wealth in crypto. I would recommend it rather than day trading because you can diversify, and even if you lose few, in the end, if you catch that one gem that goes 1000x, everything is worth it. But similar to day trading, it also requires a lot of time and unbiased research with constant updates. Okay, before we end today's video, I promised to give you my personal opinion on which strategy is my favorite. And number 1 strategy for me is DCA, or dollar cost average. Let me explain why. First of all, requirements for this one are extremely simple. You don't need crazy knowledge or crazy amount of money. You are basically investing money you would save anyway. Instead of saving it in a form of dollar or any traditional currency, because all of them are getting destroyed by inflation and are losing value every single day, you are putting that money inside an asset which is gaining value since it was created. Also, you are investing on a fixed time frame, let's say once a month. So no matter how price moves by the end of year, you will have an average price entry. This fact is another plus side for avoiding risk with your money. This is the only strategy, if you ask me, which lets you continue living your normal life while giving you nice growth of assets over time. One more thing before we end. I wouldn't suggest investing of any kind if you don't have enough income. And it is simple but true. If your income is lower than your basic life needs, or that amount is exactly the same, don't invest. Because if your monthly income is, let's say, $2,000 and your cost of life is $1,950, you don't have much room for investing. Meaning that if you invest $200, it would affect your life in a negative way, which will result in bad emotions, which will lead to bad trade decisions. Believe me, I've been there. If you are in that situation, either focus on making your income higher or your life costs lower. Only then, you can start thinking about investing. Okay, we have come to the end of this video. If you found it helpful, make sure to hit that subscribe button. Also, you can take time and write down a comment on which video would you like to see next on Bitcoin Academy, and I will try to make it.